Hello everybody, welcome back to our channel. $50 face value. This is a ridiculous face value for 1 ounce gold coin. If instead of 50, the face value was 500 or 1000, I bet these coins would be selling like hot cakes. I understand that these face values were set decades ago when the price of gold was much lower, but time to time, the face value on these coins should have been updated. In this video, I will be showing some silver bars and coins. If you want to see gold coins, I have made a video of the full Queen's B series in 1 ounce gold. The video is private and only accessible through a link that you will find on the video description. Today, we review what happened to gold and silver last week and what is affecting the prices in short term. Starting with silver, there is a clear ongoing shortage of silver worldwide. Silver got sold off, having a big drop from Monday to Tuesday, hitting the lows of $23.78 an ounce. Last time price of silver was at this low was in the beginning of December. Nevertheless, on Wednesday and Thursday, silver bounced back to close the week pretty much with a stable price, losing only 0.29% after a roller coaster ride. As gold and silver often walk in locksteps, similar story happened to gold. Huge price drop in the beginning of the week to $1,676 an ounce, then bounced back by Thursday and closed the week $45 above the week lows. Still, on the week, gold lost 0.14%. As I have said on the last video, watching gold now is like watching paint to dry. There is nothing going on here. Gold is locked in a range and could remain in this range for another week or two. In fact, I was quite surprised and frustrated with the price drop, to be honest. I was thinking, how am I gonna explain this on my next video? Fortunately, gold and silver bounced back as expected by the end of the week. It seems that every time gold falls below 1,700, it triggers the buyers and the price bounces back right away. It feels like there is an army of people waiting to buy the dips. Still, I was surprised to see gold dropping below the support levels that we discussed on the last video. On Friday, the markets were closed due to Easter holiday and will remain closed on Monday as well. To summarize the week, what has affected the prices of gold and silver was the increase on yields on the treasury notes. It happened on the beginning of the week, which also pushed the dollar higher. When the dollar rises, it's bad for gold and silver and other commodities. All commodities are priced in dollars, so not only gold and silver drop on the rising dollar, but also commodities such as crude oil. Generally speaking, there is no mystery here. Strong dollar means commodities price such as gold, silver and oil will go down. Weaker dollar means price of gold, silver and oil will go up. So with all this money being printed by the Fed, the tendency is that the dollar will get weaker. However, it does not happen instantly. It could take several years for a currency to be devalued. As consequence, we must have a long-term strategy by buying the physical metals on these dips and holding on long term. I do believe we are still in the phase of metals accumulation. As I said in previous videos, if the interest rates on treasury notes keep going higher, the Federal Reserve will have to intervene, controlling the yields, and when it happens, it will accelerate the upside for gold and silver. But just don't expect that to happen in 1 or 2 weeks. 2 months ago, the silver squeeze created awareness worldwide and people starting to wake up in regards of silver. Back then, it was hard to find physical silver to buy. the inventories were wiped out. Today, we find physical silver to buy, but the premiums are very high. When prices drop, the retailers increase the profit margin by increasing the premiums on silver coins and bars. But there is something else going on right now. The new tendency or trend is the fact that more and more people are asking for delivery of physical metals, either on the COMEX or investors that have their metals in unallocated accounts or in vaults around the world. The events that are happening in the metal markets are a little too strange. Highest metals purchase in history, highest delivery claims in history, but the prices are going down. For instance, I had some gold and silver store in a vault in Switzerland. I even made a video about this vault, but recently I asked delivery of almost all products that I had in the vault. I'd rather be safe than sorry. We don't know what's coming ahead, but whatever is happening, we are just at the beginning of it. As people say, nothing goes up on a straight line. So these price drops don't bother me too much, because I have no short-term plans to cash out gold. But gladly, gold bounced back right away and put a smile on my face. I'm obviously happy when the price of gold goes up in short term, but based on historical analysis of gold prices and charts, especially based on down to gold ratio, I believe the top of the bull run in gold and silver will be around the year of 2027. When it happens, I expect the silver to gold ratio to be below 40, and I plan to trade portions of my gold of physical metals into high dividend stocks, taking advantage of passive income for the rest of my life. Some of my gold I will never sell, and I will pass it along to my children. But once the price reaches a certain level, I will cash out parts of it, reducing my exposure to gold. My gold forecast of $1,830 in 5 weeks still remain, even though it seems difficult to imagine these levels today. This will complete this video for today. Thanks for watching. Stay safe, protect your wealth, take care.